Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Louis, and I'll be guiding you through the latest news and trends that are shaping the market. Today, we're going to talk about the current state of the Indian stock market and what experts like Pankaj Pandey are saying about the opportunities and challenges that lie ahead. In a recent interview, Pandey shared his thoughts on the domestic-oriented sectors that are likely to perform well, despite the global uncertainty. Pandey highlighted the banking sector as one of the most attractive spaces to invest in, citing the positive news flows from the RBI and the fact that foreign institutional investors have turned positive on the sector. He also mentioned that banks have been cutting savings rates, which could help them recoup some of the margin pressure they've been facing. Another sector that Pandey is bullish about is cement. With companies like Dalmia Bharat reporting strong numbers, he believes that the worst is behind us for this sector. The improvement in capacity utilization and EBITDA per ton are all positive signs, and with the cost per ton coming down, Pandey expects northern-based players to come up with even better numbers. But what about the IT sector? With the global economy facing headwinds, will Indian companies be able to weather the storm? Pandey had some interesting insights on this as well. He mentioned that while there may be some challenges ahead, companies like Bajaj Finance are still looking attractive, with room for multiples to expand and a strong growth rate expected in the coming years. As we navigate these complex market trends, it's essential to stay informed and adapt to changing circumstances. At the Riskwiser Zone, we're committed to providing you with balanced and unbiased analysis to help you make the best decisions for your investments. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone, folks. I'm your host, Louis, and we're diving into the heart of today's financial news. We've got a quartet of intriguing stories for you, so let's get straight into it. First off, corporate America is sounding the alarm on trade tensions, with many CEOs warning that the ongoing spat between the U.S. and its trading partners could have far-reaching consequences for their businesses. This comes as no surprise, really. When the world's two largest economies start throwing tariffs at each other, it's bound to get messy. But what's interesting is how this might affect the broader economy. Will we see a slowdown in growth, or can companies find ways to adapt and thrive in this new environment? It's a complex issue, to say the least. Next up, we have Revolut, the fintech darling that's just announced profits surging above £1 billion on the back of a crypto trading boom. Now, I know some of you might be thinking, crypto, isn't that just a bunch of hype? But love it or hate it, cryptocurrency is here to stay, and companies like Revolut are capitalizing on its popularity. The question is, can they sustain this growth, or is this just a flash in the pan? We're also seeing some interesting developments in the world of technology, with Revolut's success story being just one example of how innovation can drive profit. But what about the other side of the coin? With great power comes great responsibility, after all. As we navigate this brave new world of tech, we need to make sure we're not sacrificing our values on the altar of progress. Last but not least, let's talk about the FT's coverage of the crypto trading boom and its implications for traditional finance. It's clear that cryptocurrency is no longer just a fringe interest. It's becoming increasingly mainstream. But what does this mean for investors, for regulators, and for the financial system as a whole? These are all questions we'll be exploring in more depth on future episodes of the Riskwiser Zone. And finally, we have a trio of stories that caught our eye, from corporate America's warnings on trade tensions to Revolut's profits surge, and the FT's coverage of the crypto trading boom. It's been a wild ride, folks, but we're not done yet. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We've had a fascinating discussion so far, and now it's time to wrap up with our closing segment. Today, we're going to talk about the latest developments in the financial world, specifically focusing on BBA, a global banking giant. As we've been following the news, BBVA has been making headlines with its expansion plans and investment strategies. Despite the current geopolitical climate, the bank remains optimistic about its operations in Mexico, where it is the largest financial institution. In fact, nearly half of BBVA's gross revenue comes from its Mexican business. Now, you might be wondering how the bank plans to navigate the challenges posed by the U.S.-Mexico trade relationship and the ongoing tariff discussions. Well, according to BBVA's leadership, they believe in Mexico's resilience and growth potential, citing the country's low leverage ratio of 33% as a key factor. It's interesting to note that BBVA is not alone in its positive outlook on Mexico. Many experts agree that the country's economy has shown remarkable stability in recent years, despite external pressures. Of course, there are still risks involved, and investors should always exercise caution when making decisions. In another development, BBVA has also been expanding its investment banking operations, with a focus on emerging markets. The bank's CEO, Luis Bravo, recently discussed the importance of diversification and deleveraging in navigating volatile environments. As we conclude today's episode, it's essential to remember that investing always involves risks and uncertainties. While BBVA's strategies may seem promising, it's crucial to conduct thorough research and consider multiple perspectives before making any investment decisions. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, invest with caution.